Welcome back to Commercial Financing Experts Academy. My name is Sue Trung, and today I want to talk to you about the benefits of doing commercial financing. Okay, so two things. First of all, one is that when you do commercial financing, you're in a whole entire level playing field. Okay, you're now no longer competing with commodity. Whereas a lot of the residential mortgage brokers are competing with other brokers in regard to rates. Specifically, everything that's posted online, all clients, all investors, everybody out there knows what the rates are. However, on the commercial financing side, that's not the case. And you actually have to do your homework to find out what the best rate is, and so on and so forth. And I believe I've touched base in other videos about how to get the best rates and all that in commercial financing deals already. But I'll go into further about the other benefits later. Second thing is that when you do commercial financing, you're now being able to help in all aspects of financing, not just in residential houses any longer, right? So anything that doesn't fit, especially on the residential side, you're able to do on a small business lending side or on a commercial side, right? Now I've mentioned several cases in the past which I've been able to help my clients already. And I can probably reiterate that again, but if it's probably best, just go check the older videos that I have on a YouTube channel. All I want to say to you today is that when you're doing commercial financing, you are now not relegated to being an application take anymore. You're now put into a position of, I'll say, authority, such as a lawyer, for example. When they bring a client on board, I'm looked at as an authority. You know, whereas on the residential mortgage broker side, you're just seen as an application taker and pretty much an advisor. So an advisor is relegated to having to listen to what the client has to say and do what they want you to do, and basically get the financing and the best rates. Whereas on the position of authority, where I'm from, and I position myself that way, is that clients tend to come to you here. Here's what I have in my situation. What can you do to help me? All right. It's similar to a residential file, but in this case, it's like if they came to me and they say, "Look, I have a great deal with my bank lender. Can you do better?" First of all, I say, "Look, let's look at what your current situation is and find out what they have given you." First of all, and I have to see what is it that you're looking to do. Okay, how's your current situation? How is it going to play out? Were you aware of these sort of things? I don't want to put the fear of God into these clients, but basically that's what I do, right? Basically, what I say is, are you aware of any restrictions in your current offer? Are you aware of what future restriction is going to be? On your current financing, if you're using a holding company, are you aware of the limitations that it has? Or if you're using operating company, are you aware of what you're opening up your company to? What kind of risks are you opening up yourself to? Right? Yes, it's fear, but it is well-founded fear. Meaning that if they were not advisors by the bank, which most of the time they will not be. From my background in the banking world, we just tell the clients to sign here and here and here. We just tell them that, we have a GSA in your property, we got a collateral charge mortgage, blah, 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 blah. That's it. And just get clients to sign. I don't explain what a GSA is, what a collateral charge mortgage is, what is unlimited liability is for your company, right? So the liability is huge. Unlimited liability in own personal name and own company name, personal and corporate, right? Most clients don't even realize they have opened up the Pandora's box when they sign on the dotted line with any bank lenders, and without asking this question, because they don't know what the question to ask. They have no idea what restrictions are in regards to the GSA. What does that mean, right? How does that affect the company lending now and in the future? What about the collateral charge mortgage on their property? Right? Are they aware that's going to be 125% collateral charge on your mortgage, even though you're only taking a 50 or 65% loan to value on that property? Most clients are not aware of this at all, right? Anyhow, so that's where you come in, and you come in position of authority. Me now, you get to call the shots, and you be able to give them, the clients, real options, what they can and cannot do. And that's what I like about it. And like, we have real options. I call it because there's actually, you can pretty much find 2 to 3 very different options in the commercial financing world. Whereas residential channel, they're pretty much same, cookie cutter mortgages. Whether it's a simple charge or a collateral charge, that's a different matter and so on. But when it comes to commercial financing, they have a whole bunch of these in the mortgage, which restricts a client in so many ways that it pretty much handcuffs there, or pretty much locks the legs there in the ball and chain kind of thing towards that lender for unspecific lending in future. And that's not always good for the client, is it? So my position is when they come to me and say, you know what, I don't know what your bank tells you, but are you aware of these 3 things, or these 4, 5, 6 things? And I'll probably go on a different video in regards to that, so you can use towards any other future client that you may have to come across, and they can have a look at it. They understand that you provide much better value than everybody else out there, right? So the real option is we provide really different scenarios in financing. Sometimes we have financing packages where there are some operating line of credits involved, some secure line of credits involved. So different levels of mortgages plus secure line of credit, operating line of credit, right, for the company and for the business. So that's one thing that is quite differentiating when it comes to commercial financing versus residential, right? So as you can see, these are just surface level. Forget about when I go to deep dive to see what all those scary worms are that are in the book, right? Worms and apples are. And if you really sit down with the client to understand the overall situation, you may come to realize that whatever they're being offered by their institution, the bank that they went to first of all, is not going to be ideal for them. And this is where your value comes in, is that you'll be able to provide something that's superior, far and on, compared to what they currently offer by their own lender. Because why? Their current lender do not give the time in the day that you do. I spend 2 to 3 hours on a time with an intake for a client. How much do you think the banks will give an appointment for? 2 to 3 hours? I highly doubt it. Most of the time, you probably see, if you're lucky, you get between half an hour to an hour at a time. And it may spill over a little bit over along an hour, but chances are, no, I don't believe you get that kind of attention and the amount of deep dive that we go into as a specialist in commercial financing, right? And I hope you learned something new today in the Commercial Financing Experts Academy video today. Subscribe to the channel, you get all future updates from me, and click like if you do like this video. Take care, have a good day.